Well, good morning, everybody. Welcome to the MAREI PartnerCast. Glad to have you. Joining me today is Brian Rauber with Farmers. You have a lot of different agencies, I think, or different hands in the pot there. So I want to make sure I'm in the right place. Tell me a little bit about you and your company.
Exactly. Well, good morning, Kim. Thanks for having me on. Again, my name's Brian Rauber. I've been in the industry for 23 years, started corporate with Farmers and did underwriting, marketing, auditing, and then jumped over to the agency side, and I've been an agent for 17 years. You are right in terms of I am a little different than a lot of local agencies. I think the thing that separates us is that we are a true all lines agency. So we do the auto and home and commercial work comp like everybody, but we also have a heavy focus on health, Medicare, and then a large niche with the real estate investor market, specifically on builders risk insurance. So flippers. So that's a big part of what we do.
Okay. Well, you kind of covered my next question, but what products specifically might you offer that our investors would want to have within their business?
The primary one that we work with is builders risk insurance, and that's a type of policy that is specifically designed for the renovation phase or rehab phase of a property. So most of the time that comes up for flippers. If they're not familiar with builders risk insurance, it's a policy that covers the property again during the renovation phase, and the policy will terminate the earliest of three different options. Either when the property is occupied, it would terminate. Once the work is complete and it's been on the market for 90 days, that would also terminate the policy at the end of 90 days, or just the end of the policy term. And the most common terms are 6 months and 12 months.
Okay.
And, just to give you an idea of builders risk, we do a lot of it, A, because we work with a lot of investors, but B, we've got access to the cheapest policy in the market. You can get $100,000 in coverage for 6 months time period for $350. So it's really hard to beat that premium. And
typically that would be a lot of the companies I work with. It's $100. I usually figure $100 per 100,000 per month.
Right.
So for 6 months, that would be $600.
Yeah. So it's dramatically cheaper. So we do a lot of it. And the other thing that I think separates us is not only do we work with the investors, but we work directly with a lot of the private lenders as well. Oftentimes when closing's approaching, insurance is the last box to be checked. And so we kind of pride ourselves and we can get a policy issued in 30 minutes. If you give us the information we need, we can have the policy ready for your closing within a half hour. So not only do we work with those investors, but we work with the lenders as well, because they need that kind of service.
Yeah, they need it at the closing table before they're going to lend the money.
Absolutely.
I know way back when, because I worked with a lot of different companies on builders risk, some of them want to come out and inspect the property. I'm assuming that if you can do this in 30 minutes, there is no inspection required.
No inspection at all.
Okay, so you just call up with an address and.
Yeah, we've got a list of a handful of questions. Do you own it in your name, LLC name, property address, obviously. How much do you want to cover it for, and a few other questions. And again, it's very, very simple.
And there's something else I use builders risk for, and I don't know if you can do this, but I buy notes. And so I am not the owner of the property. I am the lender of the property. And if the borrower does not pay or buy insurance, well, a lot of times they say, oh, well, you get forced place. That's what most lenders do. But
Yeah.
A lot of the properties that I'm dealing with, I just want to make sure that somebody will tear the house down if it catches on fire, because they're lower end houses. So I've used the builder's risk on just covering my butt on some of these notes that I don't own the property, but I'm insuring it as a builder's risk. So is that something you could do with your policy?
Yeah, great question. Yeah, we can absolutely do that because you as the lender have an insurable interest in the property. So we can definitely provide a policy in that scenario.
some other types of insurance that we might need as a business owner? Is there any liability policies that we need to get?
That's a tricky question. And I enjoy this question because every real estate investor, their business is different. It seems like, hands in a lot of different activities. So it really depends on the scenario. What I will say is typically a flipper that works exclusively on properties that they own, generally they don't need a general liability policy. And the reason they don't is if you're working on a property that you own and something goes wrong, the wiring starts a fire, something like that, you are not going to sue yourself for the damage you did to your property. You've got coverage on the property itself that would fix it. So general liability doesn't come into play, if you're working on a property that you own. So oftentimes contractors or flippers are surprised to hear that, but you
what
don't
if I have
need
contractors coming in? When I need something?
Great question. Yeah. So if you have subcontractors, you definitely want to make sure that they have general liability insurance, because if they damage your property, you would want their policy to cover it.
And then also probably workman's comp policies as well.
Same deal. Yeah. If you've got subs, you definitely want them to have work comp. Yeah. And then again, if you're a contractor, and you work on properties that you're going to flip, but you also work on properties owned by other people, that's a different scenario. You do want to have general liability in that case.
Okay. I've came across a lot of national speakers out there when they're talking about insurance, and they're talking about, okay, well, I'm using my car is in my business. It's the family car, or the family truck, but I'm still running to Home Depot and getting product and bringing it to my house for my business. Do I need special insurance on that family car if I'm using it in a business capacity?
Generally not. I mean, as long as the usage is incidental, if you're running errands, going to appointments, minor hauling of materials, that kind of thing, your personal auto policy is going to cover that. So most often than not, the kind of investors that we work with, day-to-day flippers, they don't need a commercial auto policy.
So a lot of our members fix and flip, and if the houses are sitting vacant a lot longer, and a lot of people think, okay, well, I'm just going to go put a landlord policy on here, and I'm going to rent it in 30 days, and then it takes 60, 90, 120 days. Why do they want to have a builder's risk policy instead of just the average insurance on there? A lot of people don't realize the difference and why there's a difference.
The first thing I'll say, and I'll probably say it again, is you definitely want to have a thorough conversation with your insurance agent so they understand exactly what's happening with that property. Because if you have the wrong policy type, a claim could be denied. So, there are three main policies that we deal with investors, and that's the builder's risk, vacant home insurance, and then landlord policies. So on the builder's risk, again, that's you've bought a property, you're gonna renovate it to a certain extent. You need builder's risk insurance for that. No other policy type intentionally would cover you during that phase. And again, that policy can run through the completion of the project and when you have it listed for 90 days. So you've got 3 months of potential vacancy that the builder's risk policy does cover. Then a vacant home policy, that is specifically for a property, there's no work being done, but it is sitting there vacant. There are several policies or several carriers that have vacant policies just for that. And then the third is a typical landlord insurance policy, and that is for a tenant occupied property. And I wanted to give you an example because I'm dealing with a claim right now with the clients, and they had indicated to us that it was a tenant occupied property. The work had been done, tenant was in there. It turns out they did not have a tenant. It was vacant, and during that major, not ice storm, but the cold snap we had in February, they had a pipe burst, and apparently the water was running out of the house for about a month. And since it was vacant, a landlord policy, and this is pretty typical language, regardless of carrier. If a property is vacant for over 30 days, the carrier is going to automatically remove theft and vandalism coverage. They're not going to cover that if it happens. The other coverage that they remove is water damage. And they remove that unless you can prove that you've drained the water or you've maintained heat, to keep the pipes from freezing. So in this case, it was vacant longer than 30 days. So now the client is in a situation where they have to prove that they had the heat at least maintained. If they can't prove that, in all likelihood, the claim's going to be denied. And there were tens of thousands of dollars worth of damage, unfortunately, in this scenario. But so it is critically important that a client, especially a real estate investor, communicates with their agent. Hey, this property is now vacant. We believe it's going to be vacant for however long, or it's been vacant for a month. You may need to address, and switch policy types.
Yeah, we had a really good deal that we were able to buy because the investor had a rental property and he had it insured as a rental property, and it sat vacant for a year while he was trying to sell it. Then the temperature went down. He turned off the heat.
Oh.
The pipes froze. And that was the day he called us, was the day his pipes were frozen. I mean, he was in and out of the house every day, so he knew the pipes were frozen, and he called us and he goes, I called my insurance company and they told me there was nothing they could do. And so he canceled his insurance policy because they wouldn't pay.
Yeah.
And he called us and he paid us to take his house and take over his payments before the pipes thawed out so that we could get the contractor in there and get the pipes taken out before they thawed out, because we're like, right now, this is our price, but once the water thaws out, it's going to go down. So,
yes.
And we also use that concept in our marketing for houses. When we're marketing people with vacant houses, make sure you have the right kind of insurance. It's really expensive, but if you get nothing else out of my letter, make sure you have the right kind of insurance. And we get deals that way. So.
Yeah, and it's just a shame because those kind of situations can be avoided. And if you have the right policy, I know insurance gets a bad rap sometimes that, the carriers don't want to pay claims. It's not that they don't want to pay claims, but they're going to pay the ones that fit the policy. And if you've got the wrong policy type, they're not going to pay it.
So talking of policy types, we've talked a lot about builder's risk, but if we do own a rental, what type of insurance should we have, and what type of insurance should our renters have?
Great question. So again, as the landlord, you want a landlord policy, and again, it's a lot like a typical homeowner's policy. It's just non-owner occupied with a tenant in the property. So a landlord policy. The renters, they should have a renter's insurance policy. And in most cases, most apartment complexes require renter's insurance. I've seen with a lot of, single family home real estate investors, they don't, for whatever reason, they're less likely to require it. I would strongly encourage, anyone that owns a property with renters to require the renters to carry a renter's insurance policy. And the reason being is renter's insurance, everyone knows that it covers the personal property of the tenant, but more importantly for the landlord, the policy also includes liability coverage. So if you have a tenant that's, falls asleep smoking or, has a mishap in the kitchen and starts a fire, the renter's insurance liability coverage would pay for the damages that they cause to you, your landlord, to that property. So very important that they have renter's insurance.
Back to the frozen and the really cold, like we had a few months ago. I know you're not the insurance person for the high rise where all the renters had to be removed, but I'm assuming that somebody did not have the right insurance policy somewhere because the nobody was paying for rent for these renters. And I would assume that if the landlord has the right policy and the renters have the right policy, that insurance would have paid for hotels for these people.
Absolutely. Yeah. That's my wife and I live in a condo downtown. I insure a lot of condo dwellers, so I'm very familiar with with those types of claims, and they do get they get a little tricky because it's the coverage depends on where the pipe break occurs. So if it happens in my unit, my policy is going to be responsible to pay for the damages. If it happens in a common area, more often than not, but not always, the master HOA policy would be responsible. So in that scenario, I don't know all the details of it, but I'm surprised that the master HOA policy didn't pay for all the damages to the units, but also to put the residents up, in some place to stay until the damage was repaired.
Right. And so in condos, even if they're not rentals, I have a condo, and so we have a renter's policy, even though we own the property. It's basically the same as a renter's policy because we're insured from the studs in, and the master policy is from the studs out. So
exactly, and that's where it gets into nuance in terms of where that pipe break occurred. So if you had a pipe break in your unit and it ran down and caused damage to your neighbor beneath you, in theory, your policy liability coverage should pay for your neighbor. Now, if that occurred in a common area and caused damage to your unit and the neighbor, the master condo association policy, they should pay for those damages. But it can get, the insurance companies can fight back and forth in terms of, where did that damage start and then who is responsible to pay.
We had that happen in our building, and we had the water sprinklers went off in one unit and destroyed the 2 units below. But for some reason, the person in the bottom unit didn't have any insurance, and nobody would pay for his damage because he didn't have his own insurance. And while the insurance people above, everybody else has had insurance, and so everybody else's got repaired, and his sat vacant and eventually got foreclosed, and the bank fixed it. So we're talking about insurance for rentals. What about if I have an Airbnb? So it's not occupied all the time, and then it's occupied not by a renter, it's more like a hotel type of a renter. Is there a different policy for an Airbnb rental?
There is. Yeah, there is. That's a great question. So a standard landlord policy would not provide adequate coverage for that scenario. There are carriers like Foremost Insurance that have a policy that's specifically for Airbnb scenarios. And it's not so much that the coverage or policy is any different in language. Really, the big difference is, the insurance carrier can properly price for the risk, so to speak, in that, an Airbnb is a unique scenario where you've got frequent guests, but also periodic vacancies. So it's really more important to the carrier that they're aware of that and can price for it. Again, it's not that your coverage is that much different, but again, the carrier wants to know what's going on in the properties that they're insuring. So
I've seen the horror stories where, somebody went in to have a wild party and they just destroyed the property. So
exactly.
Well, I'm insuring. I know when I started, we had 1 or 2 rental properties. We would get individual insurance policies by house.
Yes.
But then I've talked to other people that they have a blanket policy over all of their rentals. So what's the difference, and is that a way to save money?
It can be. Now, every carrier is going to have different pricing. So there are some carriers out there that will let you schedule policies, so to speak. So you can have 10 policies and you pay monthly for all of them, and you can take homes in and out. I will tell you, advise investors to read the fine print on those. They don't always provide as robust coverage as you would get from a standalone landlord policy, but they're definitely out there, and it may be cheaper, but sometimes you get what you pay for as well. And then there's also scenarios where, depending on the volume of properties you own, you may need a commercial insurance policy as well. So again, that's probably a lot of questions with a lengthy conversation with your personal agent, but yeah, there are definitely options out there.
When you come to the MAREI meeting and people come up and ask you questions, like how much does it cost, or how quickly can you act and get us a pay? And you said for the builder's risk, 30 minutes. But if I was insuring more properties, how long would that take? Like if I'm going to do a portfolio of rentals, I'm sure it would take more than 30 minutes. You have to price that out a little bit more.
Absolutely. If you're getting into landlord policies, we want to go take a look at the property, see the condition that it's in, because different carriers have separate appetites in terms of what they're willing to accept. So like Foremost, they're a little more lenient in terms of the condition of the property. A company like Farmers or State Farm, they want the house to be, relatively pristine. So it definitely takes a little longer to insure a rental, because we want to take a look at it, see the condition that it's in.
And especially for people holding rentals, should they maybe review their policies or shop their policies every few years just to make sure that, one, they're insured correctly because nothing's changed, and two, that they're at the right pricing?
Absolutely. Yeah, that's fantastic question. Yeah, definitely. You want to review the policies every few years just to make sure you've got the coverage you need. And then, it's absolutely true in the insurance market that premiums are cyclical. A carrier today may, they may be priced to bring business in, and, maybe they have a couple bad year stretch with storm damage and a lot of claims, and they may, raise the prices because they want to get out of that market a little bit. So, and the consumer is not aware of how or why that's going on. So I absolutely encourage investors to check every few years on the policies.
Yeah, I know. My brother-in-law was an insurance agent, so I was hearing all these stories, and my sister was like, "Yep, all those tornadoes last year, we can't sell any insurance on a home in Missouri or Kansas," and they had like 4 years they were not allowed to sell insurance on a house in Missouri or Kansas because of all the tornado claims or the roof claims that they had to pay out. So
no question. There are a lot of carriers that either semi pulled out of the market, or more so than that, they priced themselves out of the market. Just that, if you want a policy with us, it's going to be expensive because we're losing money. Here in the Midwest, we have by and large the most expensive homeowners insurance, and that's because of not only tornadoes but especially hail damage. Like I said, I've been an agent for 17 years. When I first started, it seemed like you could replace a roof for $2,000, and now
8, 10.
Yeah, I was going to say 10 is probably the average, and it's there's a lot that are way more than that. So you have a hailstorm come in and wipe out a neighborhood. That's hundreds of thousands of dollars for one storm for an insurance carrier. So that is why it's so expensive here in the Midwest.
So I know a lot of times we were talking about this at the MAREI roundtable earlier, insurance wise, that a lot of us are not worried about day-to-day problems. We are only getting insurance for catastrophic loss. So when should we call you, and when does that become a claim, and when does that affect our pricing on our insurance?
Yeah, love that question. So I'm a big advocate of high deductibles, especially for real estate investors, because whether you do the work yourself or you have connections that do the work for you, I would never encourage any client, especially a real estate investor, to turn in a claim that's $1,000 or $2,000. It's, that's out of pocket that you should probably take care of yourself. So I encourage most of my real estate investors to have a deductible of $5,000 or even $10,000, because you may have a connection that can do the roof, for $4,000, when it would cost somebody else 10 to do it. So I strongly encourage the high deductibles because it keeps your premium down. And you also, you don't want a track record of a lot of claims, because that will make your premium go up as well. And, and potentially, if you have enough, could get you canceled. So strongly encourage the higher deductible.
Yeah, we've had in 20 years, we've had 2 claims, and one didn't pay, but we didn't know. So the insurance agent said, "Sit it in." We had a squatter move in July with no utilities, and then she passed away. And so we had a lot of issues with that, and we didn't know. We turned in the claim. The insurance agent wanted to turn it in just because she's like, I don't know if they'll pay. That's not something I've ever had to deal with. So,
Yeah.
but the price, they wouldn't pay it. So we had to pay it out of pocket. But
one other thing, Kim, that I'll mention you mentioned catastrophic. That makes me think of umbrella liability coverage. I very much encourage anyone to have umbrella coverage, which is, that provides additional liability above and beyond both your auto insurance and your home insurance and your rentals as well. So, as a rule of thumb, you want your liability coverage to be sufficient to protect your assets. So, home equity, savings, retirement funds, whatever that amount of money is, you want liability coverage to protect that. Because if something happens, someone gets hurt and you're liable, they're going to come after you for the amount of assets you have. So where that gets interesting is, if you own rentals in your personal name, which I wouldn't advise, and I'm guessing you don't either.
no.
If you own a rental in your personal name, you absolutely better have an umbrella, because if someone gets hurt at that property, they're going to sue you personally, and all your assets, are at risk for that. So if you own a property in an LLC, my advice on that is it really depends on the volume of assets you have within that LLC. The entity provides you some protection in and of itself. Then it's just a matter of, if someone sues the LLC, how much do you have in assets in that? Obviously the property itself, but if you have an LLC with 10 properties, you're probably going to need an umbrella policy because of the volume of assets within that one LLC.
We're getting into the asset protection discussion that usually the attorneys give to us. And I have a friend, I can quote him. He's like, yes, first have checklists to prove that you are not negligent. 2, have insurance. And 3, have an LLC to separate and only have as much asset and equity in each LLC as you're willing to lose in a lawsuit if the insurance fails to protect you. But
I could not agree more.
You're good.
Yes, I could not agree more.
Well, if I do have a claim and I call, how much is that gonna, if I call you and we have something that's valid, how much does that affect my pricing, and for how long does that affect my pricing?
In most cases, especially if it's your first claim, it won't impact your pricing. Builder's risk, it's a one-off policy, so to speak. I mean, you complete the renovation, you don't re-up the policy. So it doesn't impact you at all on that. On the vacant and landlords, it varies by carrier, of course, but in most cases, a first claim is not going to hurt you.
But if you're continually putting new roofs on every house, you will probably pay more for insurance.
Absolutely. Your premium is going to go up, and then eventually, they're going to non-renew you and invite you to go to a different carrier. Our appeal with the investors is that we're very familiar with the real estate investment market and the needs of the investors and the need of the private lenders as well. So, it's our goal to be efficient, get that, policy issued in a half hour, get it ready for closing. And then again, the other thing that I would leave you with is communicate with your agent. And like that claim scenario I told you about earlier, there's nothing that makes an agent feel worse than a scenario where something may not be covered. And that was just a matter of communication. The agent needs to know, hey, this property is vacant. There's not a tenant in there. So every situation is unique, but you've got to communicate back and forth so they know and can get you the proper policy.
All right. And then the last question is, I want to reach out and find you. So how do we reach Brian?
So 2 easiest ways. My phone number is 816-436-1016. That's directly to the office, or you can go to our website, loveisOurpolicy.com, and you can email us directly from there. we work with investors. Have private lender relationships in Colorado, Oklahoma, Texas. So especially on the builder's risk policy, where private lenders are all over the country. We're licensed in several states. So we don't only work here in the metro. We work with lenders and flippers all throughout the country.
Well, I want to thank you for joining us today. This has been great information.
Well, thank you for having me. I appreciate it.